Today is going to be about balance sheets. So let's go on in and let's talk about these balance sheets, and let's have a motivational Monday and encourage someone else. So as I check the usual to make sure that I am live and good, looks like I'm still going live on Twitch. And after they get on in, then I'll go ahead and start this balance sheet talk. But I hope everybody is doing good. Thank you for tuning in again. If I haven't came across your timeline just yet, then I would hope that someone could share this. It doesn't cost a thing, and I look forward to having a quick chat. And then after this, I'll play a little bit of chess, and then I'll have one more series for the night, and that'll be our first full day of rooting for Saul to win Academy. And it is a campaign, so if you also do share, go on and use that hashtag rooting for us all to win. What it stands for is our goal of helping 1,000 people become accredited investors, including myself, which as of this time it has changed a bit, but our goal is more of $200,000 annual income for the next 2 years, and also if we can help you get that $1 million net worth, that also make you an accredited investor. So it looks like Twitch is online. I look forward to that, and I am really about to start diving in here right away. Don't want to waste no time. So let's take off the radio voice and let's have a good time. Again, house rules. You may hear some noise in the background. You might get distracted by some noise in the background, but it's a safe place. It's a calm place right now. We have created the best environment for us to go live, and more importantly is the information and the interaction that we have, and not making it look extremely like TV. Secondly, at any moment my OBS stream could drop, voice may drop, so please bear with me if I do go out. I'll be back on and I'll just reset everything and we should be good to go. And lastly, I already kind of touched on it, this is a safe spot, so you don't have to worry about having people come on in here, judge you, criticize you. There's open space. Obviously we don't want to pass on any hatred, any negativity, as well as no bashing of religion, race, sex, or even, I think I said political already, but political is pretty big time right now with bashing, so I want to make sure we say that. But outside of that, it's a good space just for us to learn, grow, and help each other. And if you haven't already, go ahead and join our Discord channel. It is completely free to download. It's just like another app. I am totally not making money from Discord, but I found this to be the best way to build a community where I can also post these videos there. We can have conversations, and more importantly, the conversations can continue without me even being there. And that's the main part, is about bringing us together and being successful together. So with that being out of the way, and with me not saying my usual, I'm ready to dive on in and switch on over to my Google tab. And again, this is our community here. Once you go on in, all you will have to do is just click on over, decide what you're there for. As you can see, there's a little emoji quiz type thing. You just click the button, they'll switch you over to the rules, and then the rules will just go over a little bit more in depth about our community, keeping it safe and pure, and you'll be able to hop right on in and be a part of this server. So I'm looking forward to growing with you, and I can't wait to see your conversations and join on in. So let's go on over to Google, good old Google. I wanted to talk about balance sheets today. I was a little bit confused about what I was going to talk about tonight, but I was really spending a lot of time this prior weekend and today and yesterday really going over Kahn Academy. I don't know what module it is. I think it's stocks and bonds, so that was something that I'm looking to start and really pursue, and I want to get a fundamental concept or fundamental understanding of how I would go about trading, and maybe understand how even stocks work and bonds. But over and over, I see a constant relation with any of the lessons that I've been taking recently, and that's the balance sheet. And I know earlier today, if you followed along with us on our podcast meetup, almost said power chat, but podcast meetup, we were able to listen to Rich Jones, and I believe the gentleman's name is Carter. I have it in my notes, but don't have it right offhand. Cofield, I remember the last name. And they mentioned about a lot of things that will typically go on your balance sheet. So if you build something as an asset, or if you take on liabilities, and that's what I want us to talk about today. So let's already got it pulled up. Investopedia. I don't know if it's any negativity out there about it, but it seems to be a pretty good place for me to go to and get some decent information that you can further find in other places to fact check. And it's pretty neat. So that's where we're at today at an Investopedia. It looks like Adam Hayes and reviewed by Margaret James and was recently updated this year. But what is a balance sheet? So let's make this pretty easy. Let me see if I can get my Kahn Academy on here. Let's see if I can actually do a little something here myself. Trying to see if I can actually draw, but we'll see. If not, then we'll just stick to it. And if you guys know me, you know Scooby. Scooby likes to bark, and I also have another dog named Diamond. So that's our first interruption of the day. Alright, so I don't know if I'm going to do Canva or this Draw.io, but we're going to stick to it. And let me switch back over to our service here. So that's my Kahn Academy. But a balance sheet. So a balance sheet is a financial statement that reports a company's assets, liabilities, and shareholder equity. So point blank period, a balance sheet is a financial statement. That's number one. What is a financial statement? Financial statement is how you see the health of your finances, specifically for a business or even yourself. You can have, as you can see, you can have assets, you can have liabilities. I guess your equity would necessarily, I wouldn't necessarily know what your assets and balance sheets would be. However, give me 1 second. We have this protected pack of dogs here that love to protect us. But anyway, it's really a balance sheet is a financial statement that allows you to see the health overview of just assets to liabilities, and then the equation that allows you to see how much your equity is. So let's take a quick picture of one here. If I'm not mistaken, let me go ahead and find one real quick. See balance sheet, and I'll go ahead and get one here. Alright, let me switch back over. So as you can see, here's a balance sheet I just pulled up randomly on Google. Hopefully this will allow me to open up in another open image in a new tab. Ooh, that's not gonna help us there. Let's see. This one actually is on Investopedia, so maybe this actually on Investopedia. Okay, so let's zoom into this. I didn't even have to go too far. So here's an example of a balance sheet. So as you can see, there's assets and there's liabilities, and then there's equity. So this is it looks like they've done one for Exxon, and note that it says in millions of dollars right underneath it. And here's something that really confused me for a while. I guess this accounting shorthand, they don't have 5,669 $1,000 in cash, and for a whole company like Exxon Mobil, this is actually in millions of dollars. So you want to go ahead and throw another few zeros on the end. And actually, let's see if we can Google that. If I don't see it right away, okay, there you go. So a million, so as you can see, that would be 1 million. So 1,000 is a million, and I'm speculating here. I think 100,000 would be a billion, or 100 million, and then you would have 100,000 will be 1 billion, if I'm not mistaken. So back over here, oops, got it there. So now we know what a balance sheet is. So as you can see, you can do this for yourself. This is one specifically for Exxon, but if you think about assets, if you have a free and clear house, that could possibly potentially be an asset. Your portfolio for your investments, you might even have an HSA account, things that you have money in, or some type of worth that you know is pretty liquid or an illiquid, but it may take some time to sell, may have some inheritance somewhere, gold, you get the point. Liabilities, if you have a mortgage on a house, or if you've bought, or some might argue that some of the equipment that you may have, or even things that you may have, may be an asset, or potentially you've borrowed money to be able to get that asset. The easiest way to think about it is a house. So that obviously here is one for the ExxonMobil, and for a house it's pretty simple to understand. Let's try our luck here. I don't know if it'll let me draw. Man, I really want to just be able to draw. What happened to the good old paint days? Maybe it's because I have a Mac, but here's a quick example of what my take of a balance sheet would look like. Let's see if we get a rectangle, turn it around. You know, draw IO. I would hope that you have my back. Doesn't look like it's gonna have my back at all here. I'll have to figure that out. I don't want to take too much time trying to learn how to draw, so I'll figure that out another time. But anyway, balance sheets usually have a pretty easy way to look at it without much of the hoo-ha. I'm trying to take away some of all this words just so you can easily see. Kahn Academy does a really good job of that. So let's go ahead and head on over to Kahn Academy. If you haven't already, it's a free account. It's a non-profit. They have tons of information for you that you can constantly look up. I mean, even good old things that you can refer back to from grade school if you want to, and even learning a little bit new things if you never learned a few things. So let's see if this is a good way for us to get started. And while that's loading, I also have a video here on Investopedia.
A balance sheet is a statement of net worth. It's broken up into three sections: assets, liabilities, and equity. A equals L plus E. Meet Joe. Joe goes to the bank and gets a small business loan. The bank gives him cash. On the balance sheet, his liabilities increase by the size of the loan, and his assets increase by the same amount. The balance sheet remains in balance. Joe uses the cash to buy a truck and start his own pizza delivery service. His cash assets decrease, but that's balanced by an increase in his other assets, a new truck. As Joe delivers pizza, the profits are recorded in the balance sheet as retained earnings in the equity section of the balance sheet. The cash from his profit is recorded in the assets section, balancing out. Every month, Joe makes a payment against his loan. He reduces his liabilities by the amount of the payment, and his cash is reduced by the same amount. To find out his business's worth, Joe subtracts liabilities from his assets. This equals the net worth of his business.
Alright, so that's a real simple way. Again, Investopedia does a great job at making things really simple and making it beautiful. Do want to show you an example maybe here. Won't go too far in on
Let's see if we can use our example to understand the three types of income statements, and hopefully understanding those income statements will also help us understand this example. So I'm going to start off, we're going to focus on month 2, and what I've done is I've just rewritten some of this accrual income statement down here so it really looks like a statement. So this right here is the income statement for month 2 on an accrual basis. In that month we said we had $400 of revenue, $200 of expense. 400 minus 200 gives us $200 of income. An income statement tells us what happened over a period of time. What was the activity? How much revenue, how much expenses, and other things. This is just a super simplified one without taxes, without interest, without other types of expenses over here. I also have drawn the balance sheet at the end of month 1 and the balance sheet at the end of month 2. Or you could also view this balance sheet here as the balance sheet at the beginning of month 2. And the main thing to realize is income statement tells you what happens over a time period, while balance sheets are snapshots, or they're pictures at a given moment. Snapshots. So this tells us essentially, what did I have? The assets are the things that can give me future benefit. So what do I have? And the liabilities are things that I have to give future benefit to, or things that I owe. So this is what I have, this is what I owe, and then the equity is what I really have to my name if I net out the liabilities from the assets. So at the beginning of month 2, which is the end of month 1, I had $100 of cash, no accounts receivables. I didn't owe anyone anything. I didn't owe them money. I didn't owe them services. So 100 minus 0 means I had $100. That's kind of what the owners of the company can say they have of value at the beginning of the month. You fast forward. Now at the end of month 2, I now owe the bank $100. So I just put this as negative $100 here. It normally wouldn't be accounted that way on an actual company's balance sheet, but this is simplified. I have an accounts receivable of $400. So my total assets now are $300 of assets. And remember, accounts receivables are an asset because someone owes me something. Someone owes me cash in the future. I still have no liabilities, so you take all of your assets minus all of your liabilities, and now I have $300 in equity. So you can see the snapshot at the beginning of the month, 100 in equity, snapshot at the end of the month, 300 in equity. And so to go from one point to the other, to go from 100 to 300, I must have grown in equity by 200. I must have gotten $200 worth of value from someplace. And that's what the income statement describes. It describes it right over here. The change in equity, sometimes it's the change in returned earnings or just change in equity, that is going to be the $200 in net income that the company got over that time period. Now, there's one thing that you're probably confused by right now. It's like, well, how do we reconcile everything with the cash? We know that over this period we got $200 in income on an accrual basis, but when you look at the cash, we went from $100 positive cash to negative $100 in cash. It looks like we lost $200. So how can we reconcile the fact that we got $200 in income? How can we reconcile that with the fact that we lost $200 in cash? And that reconciliation is going to be done on the cash flow statement. And I'll do that in the next video.
Alright, so that was a pretty simple explanation of the balance sheet. Didn't actually give you the exact picture that I wanted to show, but nevertheless it's still a little bit deeper into what this balance sheet is. So again, that equation is assets equal liabilities plus shareholder equity, but better said, if you bring over liabilities by subtracting by both sides, it'll be assets minus liabilities equals shareholders equity. I think the first share of Investopedia said it was net worth, so that's an easy way of seeing it as well. It would be on your personal balance sheet, your net worth. So if you have more liabilities than you have assets, then you have negative net worth. So that's called being in debt, just purely as that. And having positive net worth, when you see these net worth and Forbes, they're trying to figure out what people's assets are and speculate what their liabilities might be, and then that gives you the net worth. So as you can see, it can change, vary, especially on your personal level. It's not something that really is terrible to really judge somebody on, but it's not perfect either. I think the main thing is, if you have my goal always, and when I'm starting out on this journey, is net zero. So that means no debt, so you have nothing. You maybe have no assets, but also no liabilities. And as you can see, you can start gaining your net worth to be a lot more efficient for you and what you want it to be once you're at net zero, and keeping it that way, and then add on assets and minimize liabilities to get it, or possibly even carry no liabilities on the personal side. Same thing with your business. If you start off and say you put a lot of cash in, where you take a lot, if say you gave your business $10,000 and then you spent $10,000 to get working, but none of that $10,000 went to things that could be considered an asset, then now your business is negative $10,000 in equity, or negative $10,000 net worth. So as you make $10,000, now you're back at net zero. You're basically at equal points with liabilities and assets, because now you don't have the debt anymore. Or even at that point, you probably even be, if you bought in $10,000, paid off $10,000, and you could do it again, now you have a positive asset. You have the cash for $10,000. So the point is, why am I telling you this? Because looking at balance sheets is really a good perspective for you, for any company. It's a good way to really understand. And I think, as people mentioned about Rich Dad Poor Dad, and some of the things that I know a lot of people probably wanted to learn out of it is, well, hey, how do I become like Rich Dad? How do I become successful? And it breaks down to the fundamentals, the aspects of how do I take my financial situation, get a better picture of it than just wondering and guessing, and make decisions to change where I want to be. And that's mental shifts that a lot of people see is based off of looking at your life like a balance sheet or looking at the cash flow. Cash flow is something that talks about it pretty big. We're not talking about that today, but you see that first half of Rich Dad Poor Dad as the opportunity for you to actually learn how to structure out life financial life, and finding those assets. And what Rich Dad says is, or Rich Dad Poor Dad Robert Kiyosaki says, is income producing assets. Now, a little personal story is I had a advisor at FAMU, and I was starting off doing engineering. If you went to FAMU, you probably know this gentleman. I don't know if he wants to be mentioned on it, but I really appreciate him, so thank you. And I was trying to figure out, well, how do I get myself to stay in this engineering program, and I'm figuring it out. And we somehow pivoted on a conversation about entrepreneurship, which at the moment I did not appreciate as much as I should have. And I listened, and I heard him mention about the Rich Dad Poor Dad book. At that time, I think I had read the third one, or I may not have read it at all. So it was pretty new information. And he said to me how he was pursuing income producing assets. And I really will give this away if you want the fam, if he gave you the same talk. He mentioned that he was buying gumball machines, and that they were really inexpensive to get, and he was putting them in different places. And by the time he goes for pickup, he had already made a profit. And it was, for his idea is, now it's an asset once it's paid off, and it's an income producing asset. I think my camera might have went out, so it'll come back on. But income producing assets allow you to be able to now have that money, the cash flow, and that's on your balance sheet. And if you can also be successful at minimizing or actually not even having any liabilities, now you're in a position where now you are in a positive net worth atmosphere. And I don't know why my camera went out completely. It must be the Wi-Fi. But nevertheless, I think it'll come back when it wants to. Probably just a sign that I am moving a little too much. So when it comes back on, I'll pop myself back in. But anyway, back to your balance sheet. I want you to really take away is this section is something that I think, as we're looking for financial freedom, the assets is what you want to really think about. And when those gentlemen mentioned earlier about focusing on cutting your expenses can sometimes keep you in a trap of never worrying about how to make more money. Well, make more money can be deceiving at times, because making more money doesn't mean you are putting money to the best amount of use. You can make $1 million but spend $1 million in one, and you're still in debt $1. So when you have, that's kind of the craziness about it. Like, if you, depending on if you're using cash or not, at some point you wouldn't be able to spend $1 million in one. You just wouldn't have no money. You'll be back in net zero. But if you're using credit, or you're leveraging, which is another word, then that's how you find yourself in debt. But assets, that's the point of it, where one of the points that I want you to take away from this quick power chat. Assets are something that, when you think about it, you start figuring out ways of finding out, is this an asset or is this a liability? Will this bring me more equity, or will this take equity away from me? Will this add to my net worth or subtract from my net worth? And that is the fundamental principle. I think those gentlemen from Rich Jones, Paychecks and Balances, and if you hear it other places, really helps you to find a new way of thinking. And Rich Dad Poor Dad, I think, is really a book where a lot of people make mentions, hey, it just changed my mind. Not only is it because you start to look at your certain things that are very, very ingrained into your emotion and things that you may feel, but also, give me 1 second. I think I'm just gonna close out my webcam app. So I use pretty cool app on and it turns my phone into a webcam, but there's some hiccups for sure. Got a phone call, probably be getting that one right back. But I'm gonna wrap this up pretty soon, and I don't think the camera's coming back. But anyway, I need you to take some time and think. And I think a lot too, and sometimes things that I think is an asset is not. So I don't know if this is a trademark saying or not, but I will definitely say I got it from Rich Dad. An asset, the easiest way that he put it is, give me 1 second. My apologies, had a call back to back. But so the takeaway here, without missing a step, is the assets is what we have the ability to build, and liabilities is the thing we have the ability to minimize. And this concept that takes it a little bit different. I think Rich Dad goes down the lines of calling it good debt versus bad debt. But think about, what is an asset? Is my car an asset? Is my car bring me? Oh, I think I might have got cut off right in between the definition. Rich Dad called it, an asset is something that brings money, puts money into your pocket, and a liability is something that takes money out of your pocket at the end of the month. So with that being said, we have the opportunity to really think about things that are assets as a money income producer, and is this going to put money in my pocket? So some might argue and to say that, hey, if I get a rental property, for instance, this is putting money in my pocket. Or if I have stocks and it brings me back dividends, well, I know within, if they pay out dividends in quarters every 3 months, I will, and theoretically, make a dividend if the company has made a profit, which I can divide by, every 3, and I will know how much I made for each month. So, but a liability, if I have a balance on a credit card and I know this credit card has a interest, and I'm not only do I have to pay back what I paid, but also the interest is a liability, so it's taking money. So as a business owner, you think about it as, if I'm reinvesting in my business, will this add money into my pocket, or will it take it away? Or, and since sometimes you can also say, well, is this asset going to be something that I've invested in that is liquid, or can be semi-liquid, where I can go out and sell it to somebody else and make my profit back? And if you have to buy it with debt, do you have any space between the debt and the amount of asset? So that's why it's such a big thing about down payments, because that is specifically what some might say is you putting skin in the game, which means you have, if you had to put 20% down, then out of $100 you put $20, and now if you were to lose your $20, you would feel that. But if you got $100 and somebody loaned you $100, you gave them nothing. Now if you lose $100, you don't necessarily, you may definitely feel horrible about it, but if you think about what did you lose, you really probably only lost something that's intangible, like a relationship, or reputation, or your credit. So assets minus liabilities equal equity, and equity is something that's a huge cry to call here, but this is exactly how you build it, by building up your assets column and minimizing your liabilities, which gives you equity. So I hope this was very helpful, and then I hope you also can go on and look into a few other things. Again, this is the I use Kahn Academy. I've been really looking, don't know, I'll probably do a session later tonight, but Kahn Academy has a ton of things, and this was Investopedia. If you want to read up the whole article, it's not bad. It gives you a little bit more information on liabilities, some more about the balance sheet, but I really wanted to show you how this can relate to you in your everyday life as well as your business life, and really is a way to start thinking about how you can gain wealth. So with that, hope you have a blessed rest of your evening. If you're going to tune in to check me out, we are going to go ahead and probably play chess pretty soon, get a good game in, and then I'll probably have a homeroom session where I hop on Kahn and learn a lesson with you, and then we'll be back tomorrow. So if you haven't already, go on and get on the Discord chat. I think I had somebody reach out, which was pretty awesome. Let me close the wrong thing. But yeah, if you get on to get Discord, then you'll be able to come on in here, come in to welcome. I really appreciate Tink, so I definitely will be following back, and I think he already joined. So look at that, we have our first 2 people to join our Discord, man. Thank you so much, I appreciate it. I'm looking forward to keep growing this, so looking forward to everybody being a part of this and being a part of a community that we can help make a difference any way we can. So with that, I look forward to speaking to you soon. And my phone is still not working, but just think of a smiling face, and I'll see you in the next